Hey, what's up guys? It's ZQ Chiu here. So let me hit you with this. Every trader, they talk about price action like it's the holy grail. But if that is true, why do most traders, they still blow their accounts with it? It's because they don't see it. They chase every breakout. They get trapped in all the false spikes and they blame it on bad luck. When the truth is that the market, it leaves clues in every push, every pullback, every rejection. The difference is this: the pros, we read those clues. The amateurs, they ignore them and they trade every setup that is taught to them. So today I'm going to show you the 5 golden price action setups that I use to cut through the noise, to avoid the traps, and to trade with precision. So these are simple, these are repeatable, that you can use all the time, and these are better tested. So stick with me, because once you see these 5 setups, you'll never look at a naked chart the same way again. First thing first, price action. This is like the heartbeat of the market, right? There is no fancy indicators, just pure raw price that is showing you who is really in control, the buyers or the sellers. And why does it matter? Because price action gives you the story as it happens. Indicators, they always comes in late. The price is immediate. If you know how to read it, you will see where the momentum is building, where it's fading, and where the next move could take off. So here's the catch. Most traders, they mess it up. And it's not because that price action, it doesn't work. No. It's because they force feed it. They force it to fit what they want to see. When this happens, it's going to do this. When that happens, it's going to do that. No. They chase the textbook theories, the textbook ratios. They set targets that the market would never respect. And they keep wondering why their account keep bleeding. But the pros, we focus on the 5 golden setup. And that's what I'm going to break it down right now. First off, instead of chasing after a big move, the real golden setup is getting in on the trend pullback. You may like,
oh, is it you talking about pullbacks?
Yes, I'm talking about pullbacks. I'm talking about 5 powerful setups. Pullbacks is definitely in it. If you think you know everything about pullbacks, you can stop this video right away. Go ahead. But sure, pullbacks is just one of the 5, and I'm going to show you exactly what works in pullbacks. This is where the risk to reward ratio is the sweetest. Why? Because you're getting in at the lowest point before the start of the trend once again. So when price surge up, you wait for it to breathe. So a clean retracement to the support or to an EMA, exponential moving average, it gives you a tighter stop and a way bigger upside. So this is golden setup number 1. The market is trending hard. The momentum candles, they are coming right in fast. And the greed, it kicks in.
No, I cannot miss this move. Right, the market is going real fast. I'm going to get in right now.
No. Instead of chasing, the golden setup is waiting for the pullback itself. Why? Because this is where your risk to reward ratio truly explodes. So instead of, for example, because you keep chasing, right, instead of risking $3 to make $1, because you got to have like a safe stop loss, you can, with a pullback, you can risk $1 to make $3 or more. This is the core of trading strategies to putting inside the system itself. For example, let's say the market is in a heavy downtrend, the price collapses, and instead of shorting it, you wait. When it pulls to the key resistance area, or it could be a moving average, this is your short. Now you got a tight stop just above the pullback and a clear target right below. When you're doing this, like I said, you are not risking a full dollar to make a few cents. If you're chasing, now you're risking $1 to make a whole lot more. Instead of rushing in, we wait for the pullback. This patience is what most traders don't have. The FOMO of entering when the market keeps dropping, when the market keeps rising, when you want to chase the trade. This is so common. You feel a heart pounding when the trade that you've been watching starts to take off fast, right? You feel that you want to jump in. The importance and the knowledge now that you know to wait for price to pull back is so important because of the risk to reward ratio. So now, the risk is what? Is the market shoots off without you. You miss the trade. So be it. But how many times have you chased the trade only when the market reverses and then you get stopped out? Or the market actually works, but you get a really bad risk to reward ratio? If every single time you only take trades with high risk to reward ratio, taking trades at high probability area, at your area of value, this plugs into your bigger system itself. Every impulsive trade feels exciting. Every missed trade feels like a loss. But if you are able to have the discipline to constantly only take trades in the area of value with a good risk to reward ratio, your profit and your capital at the end of the day will thank you for it. Now that you know where to enter, I'm going to show you where to place your stop loss. If your stop loss is sitting at where everyone else places theirs, that's it, you're dead. All right, and this is why golden setup number 2 comes in. Hey guys, Ezekiel Chiu here. So, if you have been searching for a reliable and a regulated place to trade, you might want to check out Equity. They have been around since 2007 and have built a strong reputation as a trusted global multi-asset broker. I mean, what's really cool is their STP and their ECN execution model, which means your trades go straight to the market without the dueling desk. Now, here's the amazing part. Equity is regulated under the FCA in the UK, SCA in the UAE, Seychelles, Jordan, and more. I mean, that kind of global oversight, it gives traders the confidence knowing that everything's handled properly. So, it is also flexible because why? You can trade Forex, commodities, indices, shares, ETFs, futures, and cryptos all in one platform. And their spreads, it starts from 0.0 pips with leverage up to 1:2,000. So, you can choose between their standard premium or swap-free accounts to fit your trading style. Now, they also support MT4, MT5, and the Equity app backed by 24/6 customer support. Aside from that, account setup is also really fast. There's no minimum deposit, there's no fees on deposit or withdrawals, and crypto wallets for quick funding. Now, if you're into copy trading, they got a copy trader portal where you can follow top traders or let others follow you. Check out Equity, links below. What usually happens now is that the market would dip and it will shake out all the obvious areas, all the obvious levels, and then takes off in your direction. How many times, if you have been trading, how many times have you entered at a trade? You know that area is going to hold, you place your stop loss, the market stops you out, and then after which it went back in your direction that you have intended itself. If you are the one nodding, you are not the only one, right? Because this is so common. So the market comes into a support, it prints a bullish engulfing candle, and then you buy. So instead of putting your stop exactly what the textbook tells you, exactly what everybody tells you, to place it right there, the golden setup is going to keep you tucked away from the obvious zone. That way the market can do its usual dance. Sometimes it spikes, sometimes it has a long wick, sometimes it's just a dip a little bit tiny to hit your stop loss before going out, and this will allow you to not get stopped out. So for example, say, take a look at this resistance chart. At the top, there is a shooting star forming. So traders, they short the next candle and then they put their stop loss just above that shooting star high. But the golden setup is different. Instead of leaving it at the obvious area where everybody's going to put their stop loss, if I am trading against you, I know exactly where I would say 90% of the traders put their stop loss. I'm just going to push it up to get you all stop out before going it back down. Why? Because everybody's stop loss is about the same. Get it? The key is to survive all these obvious stop loss areas, all this shakeout, and still be in position when the market comes back down in the direction that you intended. So what is the fix? Give your trade some breathing room. So instead of you putting a stop at the obvious area, the obvious line, you add a volatility buffer. That's where the ATR would come in, the average true range. So if the market daily range is about $1, you don't put your stop loss just 10 cents away at the high of the shooting star like everybody else. That's basically asking for your stop loss to get hunted. You add one ATR on top of that high. So placing it at, for example, at what? $1.30, for example. Your stop loss is not sitting together with the rest of the crowd. It's beyond the noise. So stop loss are not just protection. They are the key to having a sustainable win rate that adds up into your overall probability and your winning ratio. So So now, when you give your trade enough breathing space, you kind of tilt the win rate into your favor. But obviously, you cannot put your stop loss way too crazily high. Then it will mess up your risk to reward ratio. So therefore, by using the ATR method where it makes sense and having your take profit area at an area that it makes sense, that fits into your overall risk to reward ratio, that is at least 1:1.5, then you have yourself a winning system. Once you got your stop loss, what's next? Your target, your take profit would matter, isn't it? And this is what comes the next golden setup. Golden setup number 3, the target from structure. So, one of the fastest way to turn a good trade into a great trade is to set the target at the level where the market actually respects. Here's the thing. Most traders, they love to force their trades into some textbook ratio. Okay, I'm going to enter here. I'm going to put my stop loss here. And I'm going to measure where is the risk to reward ratio 1:2. I'm just going to place it over there. Or maybe 1:3 or maybe 1:5. And I know that, hey, I'm losing less, I'm making more. It sounds right. But the golden setup is to let the structure define your target and not because of some textbook theory and allow it to define your target. Because why? The market doesn't care about what you think. It doesn't care about your math. It cares about what? The supply. Where's the supply? Where's the demand? It cares about the key levels. So for example, let's say the price is in an uptrend. You entered at $50, right? You place your stop loss at $47. That's example $3 of risk. So instead of forcing a clean 1:2 risk to reward ratio, meaning your take profit is $56, the golden setup is to look left. Where is the next real resistance is? If your resistance is not at $56, for example, if your resistance is at, say, $55, the market is never going to go to $56. You're never going to get your take profit, and instead, the market is going to get stopped at $55 and comes down and hit your stop loss. So from a trade that actually went in your direction, but just because your take profit is based on some imaginary textbook ideal, you have made a loss instead of a win. Get it? So using structures to set your target is the key. So for example, let's say in this example, the trader would set a target at point A. Again,
This looks like a good target is far enough.
or maybe point B, because
Hey, it looks like good risk to reward ratio.
but if the golden setup tells you that it respects point C instead, the one where price on the left has already been rejected multiple times, right? And high chance price is going to get rejected there again. That is the real level that the market listens to. You hope that price is going to break through point C and go to B or A because you hope. But do you actually know with certainty, with high probability that it's going to do? But what if the probability of it breaking point C is maybe only a 50% chance? And if you keep trading trades like this just because you hope to win more, but at the end of the day, you actually lose more, it doesn't build back into the system itself. Alright, so what's the fix? Stop saying, okay, I need 1:2 risk to reward ratio, or I need 1:3. Ask yourself, where will the opposing pressure step in? If it's at point C, and even if it works out to say your risk to reward ratio 1:1.5, but you actually want 1:3, 1:4, for example, if that is your ceiling, that is your ceiling. Build your risk to reward ratio after you have anchored your target based on the structure itself, not before, not based on your ideal. Get it? So now you got your stop loss, you got your target. There's one more piece. What price is telling you right now in real time as it moves, and this is your next golden setup. So when price is sprinting at full speed and then it slows to a crawl, this is not random. This is the market giving you a signal. This is golden setup number 4, momentum slowdown. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. Too many traders, they see what? They see price pushing hard into a zone and they think, whoa, this momentum is strong, this thing is unstoppable. But the golden setup is spotting when the momentum actually quietly fades. The big bullish bar that you saw, it starts shrinking. The drive loses strength, and it's all happening where? Inside the supply zone. So this slowdown is not noise. It's your early clue that the move is about to flip. In a real uptrend, the candles will expand and not shrink. When they start getting smaller, the engine is stalling before going up the hill. This is what? This is like the exhaustion is setting in. So the golden setup is about recognizing that slowdown for what it is. So instead of pressing buy into a fading momentum, you treat it as a warning sign. Okay, this slowing uptrend is not a healthy retrace. It's often what? The market loading up for a reversal. So what would be a smarter play? We don't blindly short just because the candle would shrink. We drop to a lower time frame and then we zoom in on the structure. If price starts forming, say, a trend line, and then it breaks the support, that is your confirmation. So now you add in a failed retest into the bull trap. Now this is all the evidence stacking up. The sellers are now back in control, and the slowdown that you saw earlier was your first clue, and then you add the confirmation later. So the deceleration is slowing down. The momentum is dying. If you ignore it, you will keep buying all the tops, buying at the tops, right at the high. How many times have you bought at the top to only see the market drop down? But if you respect it, if you actually listen to it, you actually read and understand the market, you're going to spot reversal before the crowd even realize what is happening. Why did it drop when I was actually looking to buy? So this whispers, these clues, it leads you to the final golden setup, catching trend exhaustion before it traps everyone else. Every trend, it leaves breadcrumbs, like Hansel and Gretel, right? It leaves breadcrumbs before it dies. The key is to catch them early. So golden setup number 5, the triple touch exhaustion. Price makes a strong push higher, but then the next high is barely higher at all. So that is your first breadcrumb that is being left down there. And then it stalls, and then maybe it grinds sideways without momentum. And maybe it finally squeaks out another higher high, but just by maybe a hair, just by a little bit. And that is like your breadcrumb number 2. Together, when you start seeing them, together they're telling you what? The trend is running out of fuel. When this happens, this tells you what? The market is not exploding with demand anymore. Even though it's making higher high, it's like limping forward. It's struggling to make new grounds. So the golden setup number 5 is about what? Spotting those weak highs for what they are, exhaustion. So while most traders, they see,
Oh, high. Market is strong. I'm gonna go for a buy.
they assume that the trend is alive because you're reading price action. You see the truth. The higher highs, they are fading. It's like a boxer in round 11. It's swinging, but there's no power anymore. So now, here's the final nail. Instead of driving new highs, price rolls over, prints a lower high, and then this completes a what? A triple touch exhaustion pattern. 3 highs, each weaker than the last, even though it's higher, and then it ends with a rollover. So this is your confirmation that the trend is done. And this golden setup over here would position you with the turn downwards and not against and try to ride it up higher anymore. Smart traders can tell the difference between the market charging ahead and the market crawling into exhaustion. Trends, they rarely go up and crash in one blow, right? They fade, they whisper to you, and then they bleed out slow, right? And then if you can catch that, and if you are early to the turn while everyone is still buying at the top, this is what separates the pros from the amateurs. I think I've given you a lot of value here. Rewatch all these 5 points. Each point itself is a huge money maker. Every golden setup that we have covered today, it all connects back to one truth. The market doesn't care about your textbook ratios. It moves on structure, on momentum, and the psychology behind it. Because why? The market is made up of buyers and sellers. So when you anchor your targets to the structure, you place stop loss beyond the obvious. You wait for clean entries, confirmation entries, your risk-reward ratio still being intact. When you're reading all the slowing candles, when you spot the triple touch exhaustion, then you have turned the momentum before the crowd actually even realizes it. These are what? Not separate setups. They are one chain of how the market flows, how the market goes up, how the market goes down, how the market stalls, how the market flips. You miss a link, you miss probably a lot of setups. You miss the entire chain. Once you understand the whole 5 golden rules, you're going to see price action in an entirely new picture. Good? Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below, and I'll see you inside the training.